What's up, guys? Derek Johnson of the Freedom Factory here, and today I'm going to do a quick little video about the potential of using the COVID-19 situation and getting access to some funds that you might want to consider. Again, I am not advising you what to do. Go ahead and talk to your professionals, your accountant, lawyer, whatever your situation might be. I'm going to cover some of my ideas and just bring light to the possibility of this strategy. It's not going to work for everyone, but the more people who know about this, who otherwise wouldn't have, in my opinion, the better. So this is from the CARES Act. Inside of that act is this provision regarding retirement plans and IRAs. So we're going to cover that stuff, how to potentially leverage the CARES Act to invest in real estate or other projects you might want to fund. So if you're new to the channel, I usually cover software and automation tools and stuff like that. But I am also a real estate investor. So go ahead and, if you would, subscribe to the channel and drop some comments on this video if you have any input. Hopefully this video finds you well. With that being said, let's jump right in. So I'm here on the IRS, the official IRS website. I'll drop a link to this in the description. But this is the Q&A kind of for the CARES Act in regards to relief for retirement plans and IRAs. So you can kind of check this out yourself. I'm just going to cover the basics here. So in general, the CARES Act, Section 2202, provides for expanded distribution options and favorable tax treatment for up to $100,000 of coronavirus-related distributions from eligible retirement plans. So those will cover 401ks, 403bs, and IRAs to qualified individuals. And your employer has some input on this as well. So you need to check with your employer and see if they are kind of enabling this option. My employer is. They sent us an email talking about these different options. So just check with your employer. Now this is the Q&A section. Here on section Q3, it covers what it takes to be a qualified individual. So if you've been diagnosed with COVID, your spouse or dependent has been diagnosed with COVID, or you've experienced adverse financial consequences as a result of being quarantined, furloughed, or laid off, or having reduced hours, or if you experience adverse financial consequences as a result of being unable to work due to lack of child care due to COVID, or closing or reduced hours of a business that you own or operate. So those are kind of the qualifications. I think this one here is going to apply to some people. Obviously, if you've been impacted by COVID, discuss it with your accountant and see what they think. But the guidance here leaves it somewhat open, I think. A lot of us have been impacted financially by COVID in one way or another. So I did a little digging more into this, and I just came here on Fidelity as well. They have a little section, so check your broker. I use Fidelity, but they have a Q&A here kind of reiterating those same points. So I'll drop this in the description as well. But basically, if you've been quarantined, furloughed, or laid off, unable to work due to lack of child care, your business closed or has reduced hours due to COVID, if you had reduced pay or work hours or self-employment income, so that's kind of a key point here as well, or if you've had a job offer rescinded or a start date delayed for a job due to COVID, you may qualify for this part of the CARES Act regarding retirement distributions. So normally, you can see here, your distributions would normally have a 10% early withdrawal penalty if you were under 59.5. And you would also have to pay taxes in the year of the distribution. So what this CARES Act is doing is they're waiving that 10% early withdrawal penalty. So no matter what age you are, and this is for any 401k. It doesn't need to be a Roth. It's traditional as well. And it doesn't need to be self-directed or anything. These are just regular 401ks. So it's applicable across the board. You can take out up to $100,000 for each individual and not have to pay that early withdrawal penalty. In addition, the taxes that would be due on the distribution can be spread over 3 years. So what it is they're going to do it equal throughout the years. So if you took out $100,000, you would need to report the $33,333.33 as income in the first year, second year, and third year. That's my understanding. So there's also the possibility that you can repay this distribution. So this covers that. How I said, if you take $9,000, you'd have to report $3,000 in income for each year. This is straight from the IRS site. And question 7 here: may I repay a coronavirus-related distribution? In general, yes, you may repay all or part of the amount of that distribution. And if you repay it, it will be treated as though if it were repaid in a direct trustee-to-trustee transfer, so that you do not owe federal income tax on the distribution. So that's pretty cool. Basically, if you repay it by the end of that 3-year period, you basically don't have to pay federal taxes on the distribution. So you can file amended federal income tax returns and claim a refund of the tax attributable to the amount of the distribution over those 3 years. And you would not be required to include that income for that 3rd year. So you'd have 2 years of amendments, and that would probably get you a refund of the tax that you claimed. Now, you're going to have to work with your accountant on the cost of those amendments. Obviously, there's going to be some kind of cost to do this. I'd plan ahead, work with your accountant, see if it makes sense in your situation to do this. There's also more loan provisions. I'm not going to go into those. And another thing I wanted to cover, I want to say there was a deadline for this provision right here. So the distribution has to be between January 1st and December 30th of 2020. So you have to kind of start planning now if it's something you're thinking about. This has to be done before December 30th, 2020. So just make a note of that. And I did this little draw up here on this free little whiteboard app. So this is what we're looking at. This is a typical what you would have in a disbursement or distribution from your 401k. So you'd have that 10% penalty if you're under age 59 and a half. You'd also have to pay state and federal taxes. With this CARES Act, what it's doing is pretty much eliminating this altogether. And your state and federal taxes, you're going to be able to spread these over 3 years at the worst. And it's possible you might not have to pay federal taxes at all. So let's go through this scenario here. Say we do this, we take out $100K. In year 1, we pay state and federal taxes. The money goes into our bank accounts, and now we can do whatever we want with the money. In this situation, let's say we buy an investment property. Let's say we get one and it cost us $60,000, but it's worth $100,000, right? We paid cash, got a good discount. After all the improvements or whatever, we have $40,000 in equity, and it's a rental property now, so it's cash flowing $300 a month. What we could do is the BRRRR method. So buy, rehab, rent, refinance, repeat, right? So we paid cash for the house, stabilized it, upgraded it, got sweat equity, and now we take our money back out with a refinance. So we have all our money again in year 2. And we do the same thing, basically get this same deal or a similar one, and do the same thing in year 3. So basically at the end of 3 years, we've rolled this money from one property to the second to the third, and in the end we end up with 3 new properties with $120,000 in equity, $900 a month in cash flow, and we have our original $100,000 as well. So what we're going to do now is actually put this back in our 401k. So we're going to take this, put it back in the 401k. That's done. And now we won't have to claim that income that we would have, that 1/3 in the 3rd year. And we would have had to pay it here in year 2. But now we can go back and amend those prior years. So that's gone, that's gone. You'll have to check with your accountant on the state taxes. I'm not sure how that works. So we may end up still having to pay state taxes. That's something to look into. But as far as I'm concerned, we've got this money, waived the 10% fee, waived the federal taxes, and now we have properties with equity in them, that cash flow, and we're back to our original amount in the 401k. So you could go a lot more aggressive in this if you wanted to try to flip that money multiple times, or do multifamily or large multifamily deals, or start a business with the money. Just something to think about as an option. I know I saw that option and I was like, wow, that's pretty cool. I know a lot of people have felt like their money's trapped in that 401k. It does have powerful compounding that it's going to do if you're indexing or whatever over time. So something to weigh. I just want to give people the information that it's a possibility. You can make the decision. At the end of the day, it's your financial future. You make the decision, but know that you have this opportunity right now until the end of this year in 2020. So hopefully that's helpful. You guys let me know what you're thinking on this. I did a little Facebook post on this and got some cool feedback. It's always a possibility, or usually always, to take a loan out of your 401k, as a lot of people mention. You can usually take up to 50% of your total balance and just repay yourself with interest over time. So that's something people kind of mentioned in the post. But you do have to sell the underlying securities in that situation as well. Someone said that you'd stay invested in the market that way, but that's not true. You do have to actually sell the securities to get that loan. So some options to think about. I really like the idea, since the market is actually close to record highs right now, of potentially doing this strategy myself. That's why I'm putting it out here for the Freedom Factory. I know a lot of my followers invest in real estate. So appreciate you guys. Hopefully this gives you some food for thought. If you decide to do this, let me know in the comments, or if you know anyone who's done something similar, let me know as well. Other than that, I'm going to get back to it. I'll see you guys in the next video. Be sure to subscribe and smash that bell if you want to be notified of future videos like this one. Check you on the next one.